We are looking at the Medley Industrial Submarket, which runs pretty much diagonal along Okeechobee and just north of 74th Street, where we've got 988 properties in that area. Right now, we currently have 23 active listings for sale, 9 that have closed in the last 3 months, 101 that are actively for lease, and 33 leases that have taken place in the last 3 months. In terms of leasing, we are $18.97 a square foot. That's the average for that submarket. It's up a little bit over 2.4% from last year. So we are seeing activity in that area. In terms of leasing, we're seeing kind of like a hold a little bit, and then it'll start to pick up again. That again, there's a trend in this submarket, which is pretty much the same throughout all the other ones, just in Florida in general, where we've seen that people that had a long-term lease 5 years or more, that they were probably at about $11 to $12 a square foot, and now they're coming into something approaching $19 a square foot. So there could be some sticker shock. Once that relieves itself and those people get straightened out, then of course we can see the normal increase in leases going forward. As far as dollar per square foot on sales, we're $270 a square foot, and the expectation is that again, this is going to hold firm till about the middle of 2025, and then it will start to go up again. That one has been climbing at a little over 7%, so we can expect that similar climb once we get past all of this. So the expectation, or I guess the opportunity right now, is if you are looking for a property, right now would be a good time to get into something, because you've got about another 2 quarters before the expectation is that the prices are going to continue to rise. So that would be one opportunity. On the cap rate, we're finally seeing that the cap rate broke. It came down first. It dropped a little bit from 5.9, now it's at 5.8. So we've seen a 1% drop, or a 0.10% drop from the last time that we were looking at this. And the expectation is pretty much in line with the pricing. So once we get to the middle of 2025, we can expect the cap rates to continue to go down. And again, what's driving a lot of this is the demand. We've got 980 plus people moving into the state of Florida every day, bringing with them businesses. And we've also seen some major corporations and businesses moving into Florida and South Florida. So again, that is driving the prices on some of these warehouses. As far as the cap rate distribution, it's anywhere from 4 to 8%. So again, there's still some good opportunities that are to be had out there. As far as the other opportunity, we saw 53 properties that traded in this area the last year, and of those, 25 were on the market. So again, a lot of people are selling off market. And again, statistically speaking, from the National Association of Realtors, we know that properties that sell off market tend to sell for less. So if you are thinking of selling, reach out to us. We can definitely help you, show you how you can get the most money for your property while it's out there. So the 2 opportunities are, if you are looking for that additional space, reach out to us. Again, prices are expected to hold firm, and now would be a good time to get into something. And on the other side, if you are thinking about selling, you might want to consider selling with a professional, where we can help you get the most for your money.